What is up, guys? Taiki here, and welcome to the State of DeFi report for November. So this is going to be the agenda for the video, so let's get right into it. None of this financial advice, and I'm a person full-time in this industry, so like who knows what the hell I'm doing, so you should not be taking any advice from a person like me whatsoever, right? Like what the hell am I doing? These are my thoughts as of November 16th, and I hold these tokens for full disclosure. So I'll briefly touch on the FTX thing, but like, to be honest, at this point, like every single content creator in this industry is talking about it, so there's nothing really much I can offer. So 95% of this video is just going to be DeFi stuff slash NFTs, and if you want to learn more about it, right, just watch some conspiracy theory videos, right? I guess the only thing I can offer you, right, as I guess advice or words of wisdom, right, is to just alleviate yourself from potential bridge risk. We saw this with the Bitcoin on Solana, right? The Soleil Bitcoin. FTX was issuing this, so when FTX went under, then these Bitcoins were no longer backed. And I've talked about this every single week, I think, or every single month. But if you hold Bitcoin on an alternative layer, layer 1 or even an L2, you don't really hold actual Bitcoin, right? Like not even actual wrap Bitcoin. You're holding this bridge asset where if the bridge gets compromised, right, and the assets underneath the bridge gets drained, then your asset, right, like wrap Bitcoin that you hold on Avalanche, is not going to be backed by anything. Of course, right, I don't want to cause like FUD, right, and I'm not saying like these bridges are faulty or anything, but just be aware that these risks exist, and don't put yourself in a situation where one bridge going down is going to destroy your entire portfolio. Okay, so I've talked about farming on Algorand, and I had some Bitcoin on Algorand, but given this entire situation, right, the yields on Algorand are still good, but I'll be slowly taking my Bitcoin out of it, and I'll be putting it into self-custody or just converting it into Ether or Track Crypto. And I'll talk about my thoughts on Bitcoin versus Ether later in the video. And I'll still farm on Algorand, right? I still think it's a pretty interesting ecosystem. Could do well 2023, 2024, and I'll play with what I have, right, that I got for free via farming. But just understand that people are going to be doing this, and people talk about going risk off as like just selling coins, right? But another way of going risk off, if you're worried about bridge risks and I guess alt L2s or alt L1s, is to just take your assets out of them completely. And if you are going to hold assets on alt L1s, then just don't be too overexposed, and if you can, hold native assets. For example, native USDC on Avalanche has no bridge risks, right? So I'm very comfortable holding native USDC on various chains, as long as it's not a bridge asset, right? Just be aware of that. Tether is native on Algorand, right? So these yields are still pretty good, and I still think it's a pretty interesting farm, given that you can still farm these airdrops from these DeFi applications. But just be aware of the risks involved. So I've been saying this for the majority of the year, but I expect Ethereum mainnet TVL dominance to go up. I also expect DeFi 1.0 TVL dominance to go up, right? Like there's no point in us deploying capital into like AAVE forks or Curve forks, even if the APR is attractive, right? Like why take on that risk? I actually think that in this type of environment, these DeFi dinos can actually consolidate their power, because as people go risk off, right, like would you rather earn like 6% yield on stablecoins on Curve or 12% yield on some random new farm paid in some random farm token, right? Like I would much rather just put it onto Curve and just just go risk off that way. So I actually think that DeFi 1.0 tokens can do well coming out of here. Of course, in the short term, it might not seem like it. I'll talk about AAVE later in the video. And I still like the AAVE. I mean, AAVE is my favorite application in all of crypto. And I still think that the AAVE token could be an interesting hold over a long enough time horizon, right? But this is the screenshot I took of DeFi Llama, right? TVL for various blockchains. And hey, Avalanche number 6 now. And Arbitrum hit the top 5. Okay, so I've been saying Arbitrum should be top 5, probably top 4 by end of year. It kind of depends, right? But I expect Arbitrum to flip Polygon at some point in the next couple of months, because I still think that Arbitrum is the place to be in terms of like new DeFi innovation other than Ethereum. And if you think about, and also I guess touching on Solana, I don't know if you can see this, but Solana is like now number 12 with $300 million in TVL. I really feel bad for the devs on Solana. A lot of people are trying to compare Solana going down 95% to Ethereum going down 95% in 2019. And hopefully that happens, right? It'll be a really good comeback story if Solana can come back. But I guess one word of caution is given the whole supply dynamic on Solana, right? Given, a bunch of these VCs, predatory VCs and Alameda holding Solana, I just feel like Solana is going to be an untouchable asset for the next couple of months. But, it depends, right? And what ETH had going for them in 2018, 2019 was that if you're trying to build a smart contract application or NFTs, there was nowhere else for these developers to build, right? Other than Ethereum. So, it was able to survive a 95% drawdown. But now, as you can see here, there are various other chains that people can build on. So I know that some Solana devs are very loyal to Solana and they're going to continue to build, and I hope that happens. But nothing is stopping these developers from just moving over to another Rust-based chain like Atom or Near or like whatever new L1 that ends up popping up, right? So that I feel like that's one bad thing that could happen to Solana, given the whole washout, given that some of these tokens are going to go to zero, given that they had investments from like things like Multicoin, right? Very predatory VCs. Who knows what's going to happen? So for me, just focusing on Ethereum, DeFi applications, Ethereum L2 based applications, and if I am on, I guess, Alto ones, I'll stick my capital with Avalanche because they have GMX and GLP, right? So that's kind of how I view it. General thoughts on Contagion: funds will go bust. We've seen Ikigai, that fund essentially, probably going to wind down, right? And Ikigai in Japanese stands for the will to live, and unfortunately I don't think there is any more will to live there. I hope they survive, but it is what it is. A bunch of funds had capital in FTX. Market makers are hit across the board, and if market makers are hit, it means that liquidity across the board for the majors and even longer tail assets are going to go down, therefore causing more volatility. So if you are buying assets, just understand that, hey, if you're not in it for a short-term trade, it's going to be volatile, right? It's just like the market structure we're in right now. And obviously some projects will go to zero. For some reason, these DeFi projects had their entire treasury on FTX, and they're probably going to go to zero. A bunch of stronger projects, I guess, obviously had a Gnosis safe, or they kept their treasury on chain. So I think those are fine. And ultimately, prices for every DeFi token is down, but I think the fundamentals have gotten stronger, right? I think the whole FTX saga is going to drive people to trust centralized exchanges less, and people will be forced to learn self-custody. Even people that's been in the space for 5 years, right? They still hold the majority of their assets on centralized exchanges. I think that's going to change, and I think that's going to be for the better, right? So I think that's going to be tailwinds for both DeFi and NFTs. And it's funny because NFTs, right? Even if you have no idea how blockchain works, if you buy an NFT, you have to self-custody your NFT. And I would also encourage people to not believe everything you see online. I think we're in this environment where people are just looking for things to fail, right? People are literally looking for things that could fail. Let's make a tweet about it. Let's make a video about it. And, just don't trust everything you see online. Always trust, but verify. And for me, right, I'm really sorry for anyone that's lost money on FTX, right? And I really empathize for them. But I don't care about the 69th conspiracy video or conspiracy tweet thread on SBF or FTX anymore. And if you want to clean up your timeline, I suggest everyone do this, where SBF, FTX, Caroline, Sam, Alameda, right? If you just purge these words from your timeline, I think your Twitter timeline is going to look a lot more optimistic, and you're actually find things that people are building. This is a little bit of a cheat code to not get too caught up in this mess. Of course, you should track it, right? Because surely there's going to be contagion, whatever. But for me, it happened, right? Let's move on. To be honest, I really don't care what happens to SBF. I hope he goes to jail and whatnot, or I hope something happens to him, right? But who cares, right? Let's move on as an industry. So Before I talk about new projects, I'll talk about yesterday I bought GLP Lump Sum, and I'll talk about it. And I still think that in this type of environment, I have no idea what's going to happen to the price. But I think generally from a farming perspective, I think it's generally good to just have exposure to the majors because they're going to be less volatile. We all know it's going to survive, it's like stable. Like for example, like GLP is like roughly 50% stable coins. So even if you buy like $10,000 worth of GLP, you're still protected to the downside relatively because roughly 50% of GLP holds stable coins, and you're going to be earning real yield where it's not going to be paid in a farm token. You're actually being paid out in Ether or AVAX, whatever your chain you're in. The recovery from now on is likely going to be a long one, right? Even if this is the bottom, right, 15.5K or whatever we hit, we're not gonna. I think the era of V-shaped recoveries are most likely over, right, in the short term. And no one knows what kind of dead bodies are going to resurface in the coming weeks or months. However, I truly believe that GLP is a time in the market beats timing the market type of asset. And of course, you can say this for anything, right? You can look at the price of Bitcoin now and say, hey, like in 2014, right, time in the market beats timing the market because Bitcoin's at much higher prices. But obviously, when you're living in the moment, it's really, really tough stomaching these drawdowns, but I think for GLP you can actually stomach all these drawdowns because for the reasons I'll talk about right now. So on the left hand side you see the GLP yield on Arbitrum. It's 53% being paid in Ether. That's a cheat code in this environment. And on the right hand side you see GLP for Avalanche paying 29% in AVAX. Semi cheat code, but obviously it's better to be on Arbitrum. On GLP, these are the assets that composed of GLP. It's roughly 50% stablecoins, right? As you see here, you are exposed to bridgers, right? Like BTC.B is like the Avalanche Bitcoin, Wrap Bitcoin. These .E assets are all bridge assets. So you are being exposed to a bridge asset. So, just be aware that exists, right? Don't just YOLO into this, assuming that, everything's gonna be fine because there's always risks involved. But I'm not a huge, I've been structurally bearish Avalanche for quite some time. But even Avalanche, 6%, 7%, 8%, it's not going to make a big deal in the grand scheme of things, right? Even if Avalanche goes down and the Ether and Bitcoin is doing well, right? It's still going to pay well given the yield that this thing is earning. On Arbitrum, 35% Ether, 15% BTC, roughly 1% Uniswap and Link. To be honest, I wouldn't mind holding Link and Uni at these price points, but even if you don't want to, right? It's only 2%. And it's roughly 45-ish percent, 46% stablecoins, right? These are good assets to own, and it's being paid in ETH and the AVAX. What more do you want, right? I think people, look into DeFi. It's hey, I want a 50x, right now, right? But I feel like the beauty of DeFi in this environment is the ability to be a liquidity provider with a stablecoin muted position, right? Volatility muted position, and earn really good yields at it. And I drew this box in 20 seconds. I have no idea. Who knows what's going to happen to the price of Bitcoin? It might go down lower, it might go down a little bit. But I think it's fair to assume that we're going to just be sideways for some time, right? In some range, might be lower, might be higher. Who knows? And I have no idea what's going to happen to the price, but if I believe in the industry, if I believe in Bitcoin, if I believe in Ether, if I believe in GMX, then surely GLP is going to be a really decent asset to hold for the coming months. GLP, right? So these are the quick, key points that make me like GLP. It's 45 to 50% stablecoins. Fees are real, paid in AVAX Ether. GLP gives me a slow drip of GMX, right? So it's a way for me to farm GMX because I hold a bunch of escrow GMX. If you don't hold any, then you can't really farm GMX at this point. But I feel like the yield itself is very, very attractive. And for me, I think I'm most likely going to farm and dump my AVAX into GMX. So I have a bunch of GMX on Avalanche, right? It has a bunch of multiplier points, or that percentage point, the boost. But obviously, I'd rather hold GMX on Arbitrum. So I think what I'll do is whatever AVAX I farm, I'll probably convert it into Ether, bridge it over to Arbitrum, and buy GMX with it. So I'll hold probably GMX on both chains, Avalanche and Arbitrum. That's probably the idea I have in my head. And GMX, since the beginning of the year, is basically flat, right? This thing is holding up better than stocks, right? And I think it is showing strength, it's easily an asset that I feel comfortable holding throughout the bear market because it pays, and I definitely see where the trend is going. I think more people will trade on GMX over centralized exchanges, and more people will trade on like other decentralized protocols in the future. The fees are going up only. I don't expect these to last. Obviously, when the markets are volatile, fees will go up, volume will go up. But when the dust settles, I feel like volatility is going to just go down across the crypto markets. And when volatility goes down, less people will trade. So I wouldn't look at the current volume and fees and just assume that it's sustainable. Sure, 6 months from now, 12 months from now, it might be there. But if you have in the next 1 to 2 months, I expect the volume and fees to be at elevated levels. But it's going to go down once volatility is muted. It might have a higher floor than before, right? But I don't think it makes sense to look at the current fees and just do some discounted cash flow model, right? Anyone that uses PE models in crypto has gone wrecked. So I don't really recommend them. Maybe in like 5 years you can do it, but right now just focus on the fundamentals. Where is the space going? Which industries, which sectors, which protocols have tailwinds, and just focus. If you want DCAs or buys there. FTX fallout, definitely positive for things like GMX, GNS. And Jordy had an interesting thread of, I guess, the pros and cons of these decentralized perpetual exchanges. And I don't think I've ever claimed that GMX is going to flip like Binance volume, right? Because I guess you can always argue that GMX and GNS, right, these Oracle-based applications, they're not true DeFi in the sense that you're essentially trading numbers on the screen because GMX and GNS, they take price feeds from Chainlink oracles, and Chainlink oracles, they take price feeds from centralized exchanges. I don't necessarily think that's a bad thing, right? I don't think that centralized exchanges will cease to exist. I still think that centralized exchanges act as a really good on-ramp, off-ramp, and for people new to crypto that don't you want the self-custody, right? They're gonna just hold assets on a centralized exchange and hope not to get rugged. So if you believe that decentralized exchanges and centralized exchanges will coexist, I don't really see a big down point. A downfall in the fact that hey, they use Chainlink oracles. However, from a user experience perspective, this does have some fallbacks, and Jordy does make a decent point. And X is the lead dev for GMX, and he mentioned that given that they use Chainlink oracles, they introduced a requirement that price had to move by more than 1.5% or 3 hours. Had to pass before a position could be closed in profit. And obviously, right, from a user experience perspective, this isn't ideal, but it's a necessary evil, because if, for example, prices are volatile, right, as it is now, obviously these Chainlink oracles are taking feeds from centralized exchanges, and there could be a lag. So any bot or any sophisticated actor can front run these trades and drain GLP. So I mean, this has been known, right? I'm not sure why it's being brought up by all these GMX fudders right now. But one way that they're trying to mitigate this is through a partnership with the Keeper DAO, where this partnership that was that came out on February 4th said Keeper DAO, they run MEV bots, like arbitrage bots. They're going to get the jump on arbing, and any profits they make will be split with GMX and the GLP holders 80% to 20%. So whatever arbitrage profits these Keeper bots make, 80% goes to GLP, right? So it gets refunneled into the ecosystem, and 20% goes to these Keeper bots. So instead of random bots making money, the money will stay within the ecosystem. So in terms of black swans, I guess, maybe the Keeper DAO team goes malicious and they just extract a bunch of funds from GLP before the GMX team can, blacklist the bot address or something, right? That's always a risk. To be honest, I don't think Keeper DAO is gonna rug or anything. They're pretty well capitalized, right? They do these financial reports every quarter. I've covered Keeper DAO. If you go back to my videos, February of 2021, right? I've lost a lot of money buying these Keeper DAO tokens. But this is when I didn't really understand DeFi, right? I was like, oh, Keeper DAO, MEV play, I'm gonna buy. And I just got wrecked. But it doesn't mean that the project is bad, right? They're still working. And who knows, maybe they're gonna make a comeback, whatever. But the point is that Oracle-based systems aren't perfect, and there's always risk. But I think, I'm not really making the claim that GMX is going to hit like a $32 billion valuation, right, which was like the peak of FTX's valuation. But I just think that centralized exchanges, decentralized exchanges like GMX, GNS can coexist, and they're going to exist as viable alternatives to things like Binance. I guess one worry that I have for GMX, right, they are an Anon team, and they're really careful about their OPSEC, right, Operation Security. I tried to talk to one of, like I said, devs for GMX, and I was like, hey, I'm not going to dox your voice, I'm not going to record, I just want to get to know you better, and like where GMX is going. But this person, right, he or she or they, they said, I don't feel comfortable doxing my voice. So they're very, very careful about, just doxing themselves. And that could be a red flag, right? But, I given all the regulation fear, right? I mean, I don't really blame them, right? And I would rather like the product and the code speak for itself. I'm just sharing all these things with you because, with FTX falling out, right? FTX sponsored all these influencers, like these podcast shows and whatnot. And, I don't really blame them, right? Like how could they have known? And I'm glad that I don't take sponsorships and whatnot. But I guess I have been a very public advocate for GMX since the beginning of the year. And if they go to zero, or if there's like some exploit, right, I feel like the pitchforks will be thrown at me. And I'm sure like most of you understand the risks and whatnot, right? And there's like Anon devs and like all that, which I've talked about. But just beware, GMX isn't perfect. It's great, right? GLP great, GMX great, application's good, in my opinion, right? Not perfect, but pretty good. But just don't YOLO your net worth. GLP has bridge risks, GMX has black swan risks, and hopefully, and I'm only going through this too as well because GMX has been probably like the strongest asset of 2022 within the cryptoverse, right? So it's good to think about what could go wrong instead of just focusing on the positives, even though, I do like to focus on the positives. So that being said, let's talk about me turning into an ETH Maxi. I mean, kind of, right? I still believe that we're in this multi-chain future, but given the headwinds that surround the crypto industry right now, I think in the short to medium term, I think it makes sense for me to just focus on Ether other than other chains. And, I'm kind of echoing DeFi XBT's tweet, right? A tweet here. I don't really agree. I mean, he clarified, Bitcoin is like, when he said Bitcoin is a failed tech, he just meant that Bitcoin is what it is now. They're not really innovating, and there's beauty in Bitcoin, right? Satoshi's origin vision, origin story and whatnot. But we've seen Ether become deflationary. It's probably going to become inflationary again once there's less volatility in markets. But there's also trust in centralized exchange shattered, and I think it's going to drive more people into self-custody and decentralized finance applications. It doesn't mean that I'm bearish Bitcoin, right? But it just means that I'd rather hold either GLP or try crypto than spot Bitcoin at this point. Obviously, I don't think it's bad to just buy Bitcoin at these price points, right? I'm sure you'll be happy at some point in the future. But from my perspective as a DeFi guy, I've just, like seeing FTX getting wrecked and destroying the wealth in the industry. For me, it just made me more bullish on the prospects of DeFi in the future, and I feel like I'm like entering the dark side. I'm joining the dark side, right? And GLP and TriCrypto, they hold sizable amounts of Bitcoin as well, so it's not like I don't want any exposure into Bitcoin. It's just that I'd rather hold those assets over Bitcoin because it pays it pays yield, right? Whereas Bitcoin does not. If you want to earn yield on Bitcoin, you have to take on risks, right? And all these Bitcoin maxis that took on these BlockFi sponsorships, right? And they're also wrecked. So DeFi. In terms of, I guess, tailwinds other than GMX, right? The benefits of holding TriCrypto is you can hold it. There's like rumors about CurveUSD, which should come out sometime this year. But one of the rumored assets that you can use as collateral to mint CRV USD was TriCrypto, right? So you can hold TriCrypto, it pays yield. You can use it. You can mint CRV USD with it, and I'm sure you can use CRV USD to farm on Ethereum mainnet. Who knows? Like maybe that can be a good way to earn like more yield, right, on TriCrypto. And Bitcoin will come back, Ether will come back. But I expect sideways at some range, right? So might as well earn yield with it. There's always smart contract risk, so just be aware of that. TriCrypto yields these assets, right? I guess this thing has tether risk and like wrap Bitcoin risk, right? Because wrap Bitcoin, the custodian is BitGo, but they've been around. I mean, there's always Tether FUD, right? There's always like wrap Bitcoin FUD, but and ideally, right, I don't have to trust these custodians, but I personally think they're fine, right? Not financial advice, but 10 to 15% yield. Right now, the base curve APR for Track Crypto is pretty high, right? It's generally in the 1 to 2% range. So I expect these yields to come down to like 10 to 13% ish. But it's still good, right? Like it's still good. So I'm probably gonna just not really gonna hold any Bitcoin in the coming weeks, months. And for me, like the rule I set for myself, and I mean these are like malleable, right? Like I'm not really set on these, but I'm like, given the risks of GLP and GMX, I'm not going to put more than 20% of my portfolio into it. I trust Curve more, right? So I would much rather put more into Track Crypto than GLP, even though I do believe that GLP is a better product than Track Crypto, just so you know. And talking about NFTs, I still think that even though the NFT market is like dead right now, right? It's been dead for like the past couple of months. I still think that if you think about new capital coming into the space, I of course expect more TVL to flow into DeFi, but I think the thing that comes back first are just going to be these consumer brands launching NFTs, helping shift the sentiment towards NFTs, because some people still think that like NFTs are like bad for the environment, right? Even though ETH moved to proof of stake, I think it's going to take time for that sentiment to shift. And of course, right, the PFP mania where people are spending like $500,000 on like monkey JPEGs, right? Like that doesn't make any sense, right? But if you think about the next wave of NFTs and the adoption, it's most likely going to be very low cost or free to mint type of NFTs launched by consumer brands like Nike. Nike just unveiled a .swoosh platform that's going to launch on November 18th. Or at least the website I think is going to launch this Friday or sometime. And I think you can start minting NFTs in January. But if you look at this thread or this article, Nike has allegedly made at least $185 million in revenue on Web3 products. Like I didn't even know that. Like how did they like make this much? And if there's any consumer brand that is going to nail NFTs, it's going to be Nike, right? It's going to be Nike that's going to be the first mover, right? And then I'm sure that other consumer brands will follow. So there's that. This is registration opens on November 18th. I have no idea what this means, but I'm gonna register, gonna mint. It's gonna be on Polygon, right? I mean, Polygon BD is like crazy good. They did Reddit NFTs, and they're also onboarding Starbucks. I mean, Nike NFTs, Starbucks NFTs. It's not gonna make Polygon price go up, but maybe Matic can outperform in the future because if they're able to onboard these consumer brands, you also have to price in the future adoption of consumer brands, because if you're like a new consumer brand trying to get into NFTs, they're going to look at the current landscape of, I guess, crypto and NFTs, blockchain, and they're going to say, hey, Starbucks did it on Polygon, Nike did it on Polygon, so I'm going to do it on Polygon, right? That's probably like the shift. The next wave of NFTs most likely looks different than all the PFP that went crazy in 2020, 2021. Maybe it's gaming, right? A bunch of gaming projects raised a bunch of money during the bull market. They're building. Maybe they ship something substantial in 2023, 2024, and maybe those NFTs end up being worth something, right? Who knows? But I think it's a pretty interesting sector to keep an eye on, even though it's pretty much dead, right? And for like an argument perspective, right? It's like, would you rather get into NFTs now, right? When sentiment is dead, people think NFTs are dead, versus like when it was pumping up only, right? I think it's best to like look into NFTs, get into NFTs right now, because everything is down, right? Okay, so let's pivot into DeFi stuff, Balancer and AAVE partnership implications, and there's a lot of excitement around the Balancer ecosystem. And to be honest, when I first heard about like Aura, Balancer, etc., I was kind of skeptical, right? Because how does Balancer intend on competing with Curve and Uniswap, right? The top two exchanges, decentralized exchanges in DeFi. But I do think that they are on the right path to taking significant market share, and I'm going to keep an open mind. So one thing that Balancer has going for them is their partnership with AAVE. AAVE is the number one bank in crypto, and I expect that to last, right? And back in March of 2022, AAVE and Balancer did a token swap, right? A treasury token swap. And when I saw this, I was like, I don't really know why AAVE is doing this, but okay, let's put that in the back of my head. And on October 24th, Llama XYZ, who is an avid contributor to decentralized governance for AAVE, put up this proposal to essentially put up convex LP tokens / curve LP tokens and Aura LP tokens as collateral for people to borrow against. And 95% of the farming rewards, swap fees, is going to go to the user, but 5% can go to the DAO, right? So it's going to be additional cash flow, additional revenue for the AAVE DAO. And this is this was posted on October 26th. This is a good way for AAVE to get into VE tokens, and this is interesting because AAVE right now is like a pure governance token, and they introduced like the Go stablecoin, right? The GHO stablecoin, the over collateralized stablecoin, and everyone was speculating like how they're going to create liquidity for the GHO stablecoin. And it seems like what they're going to do is they're going to allow people to use like Curve, Convex, Aura tokens as collateral on AAVE for them to borrow against. But in return, right, for the additional utility that AAVE is going to serve, these users, what you'll be giving up is the voting power. So if more and more people, right, put their LP tokens for Convex, Curve, Aura, Balancer as collateral on AAVE, the DAO gets control of the governance power that these LP tokens generate. And using the governance power, they can redirect emissions, CRV or Balancer emissions, towards the AAVE LP or the GHO stablecoin, right? So I think that's the direction they're going for, and I think it's pretty smart, to be honest. This is like I already kind of explained this, but this is like generally the flow chart, and 5% of, I guess, the farming rewards goes to the DAO itself, right? So it's additional revenue. So Go likely going to have the deepest liquidity on Balancer. It's always going to have liquidity on Curve and Uniswap, but I think that's where the trend is going, and I think this partnership creates positive future tailwinds for both Balancer and Aura, though I'm still kind of skeptical. This is a speculation on my part, right? I have no idea what's going to happen, but one way that the AAVE token can have more value in the future is having it become more of like a governance token, right? Maybe if they can capture all these VE tokens as collateral, perhaps xAAVE or VEAVE can determine where voting power goes, and if VEAVE is created, like Aura can accumulate that as well. Aura, for those that are unaware, is like a convex but for Balancer tokens, and hopefully for other governance tokens in the future. These are all what ifs, but I think it's productive to think about what could happen, and think about, okay, like if this happens, it's bullish for these tokens, right? Just so that, if they happen, you can act immediately, right? For example, like, it's probably good for AAVE, right? Because they don't have to emit AAVE tokens. Still think Aura is interesting, right? They have a 25% share of VE BAL, so they get to control where Balancer emissions go. Their TVL went down recently because, crypto prices went down, but this was one of the few DeFi projects where, aside from GMX and gains, where TVL was literally going up only in a bear market. So I think it's something to keep an eye out. And they're trying to create this holistic VE system where, they're accumulating VE VAL tokens right now, but they're also going to accumulate other VE tokens. So I think I think the Aura team is going to be pretty slow when it comes to figuring out which governance token to accumulate and whatnot. But the Aura team is pretty strong, right? 0x Maki is one of the co-founders, and I expect good things coming from them in the near future. I don't own any, obviously. As I said in the disclosure, I was kind of worried about these unlocks that was happening, right? So a bunch of these Aura was unlocking like in late October, but price has been pretty stable, right? So maybe these early Aura farmer token holders, whatever, they're like longer term holders, right? Who knows? But Aura was able to withstand big unlock, and price is relatively going sideways, roughly. Cool. So let's talk about Canto. Canto is another project that kind of flew under my radar, but I think what they're doing is interesting. I do not own any. I'm not interested in owning any, but why not, right? Well, why not share this to you just so you know what's going on? So Canto is going to be an EVM chain built on top of the Tendermint consensus engine on Cosmos, and they have this interesting thing where they're trying to create free public DeFi infrastructure. So let's kind of go over what that means. Sorry, this screenshot is outdated, but don't look at the price, don't look at the market cap, but just look at the bridge data, right? the TVL for Canto has been going up, and in a bear market, it's something to keep an eye on. Going back on, I guess, the free public infrastructure perspective, so Canto has these decentralized exchanges and these lending markets, but these applications, the protocol cannot be upgraded and will remain ungoverned. It's gonna run in perpetuity on Canto without ever being able to launch a token or implement additional fees over time. So it's not gonna have a token and it's not gonna have fees. So it's free public infrastructure, right? It's similar to how public parking is free on the streets and anyone can take advantage of it. And hopefully, as more and more people take advantage of, I guess, the parking slots on the streets, it's going to create more value for the businesses that are like in that town. And similarly, if more people bridge, if more people benefit from this, the DeFi applications that build on top of Canto can benefit, right? Because there's less extraction going on in terms of fees and whatnot. That's same thing going on with the lending market. And there's also this stablecoin called Note, which is this unit of account token. Sorry, let me close the door like this. My girlfriend just came home, but we'll keep going. This Note is a pseudo stablecoin, and all interest paid by borrowers will be distributed to lenders with no interest extracted as revenue. Kind of cool, right? In terms of like the ethos of Canto, I think it's kind of interesting. But like, who's going to build on here, right? Like, if they can't really extract value. And how a Note works is it's not necessarily like backed, right, one-to-one by like USDC or something. But basically, if Note is below $1, the interest rate you can earn to lend out your Note is going to go up, hopefully creating more buy pressure for Note. And if Note is over $1, then the interest rate that you can earn for lending out your Note goes down. This is kind of sus, right? Like, I'm not sure if I trust this kind of model in a bear market. But from like a builder's perspective, definitely interesting. And they're trying to go with this whole creator builder ethos, right? And 13%, roughly 13% is going to the devs, and 2% to the airdrop, and then 85% to the community via liquidity mining rewards and developer grants. If you want to farm, right, these LP tokens, right, Canto Atom, Canto ETH, Canto Note, Note USDC, etc., right? The screenshot's a little bit outdated, and the APR is probably lower, but you can LP and then put it as collateral, and you can farm more Canto, right? It's a super inflationary token. And Scott Lewis is the founder of Canto, and he said that it's an experiment that if you got rid of the corporation, the foundation, got rid of the team, got rid of the big money, people would maybe self-organize around a shared vision for the future. And it's a pretty grand vision. One thing I wish they did, and obviously I'm like an armchair quarterback when it comes to like developers and whatnot. But if they really wanted to say, hey, no team, builder's vision, shared vision, no VCs and whatnot, like, why did they allocate 13% of tokens to initial contributors, right? If you think about the Bitcoin's origin story, right? There was like no pre-mine for Satoshi. Obviously, Satoshi has a bunch of coins, but he had to mine it himself. And I wish they did that, where 0% went to the team. But given that they knew this thing was launching, maybe they could have been early LPs and they could have farmed a bunch of Canto themselves, and that was like their way of getting allocation. I feel like that would have been like a better story. But obviously, like these devs have to eat and like whatever. But just like who cares, right? It's just my opinion. Canto seems like the antithesis of things like Aptos and Sui and even Solana, right? Where it's just the majority of the tokens just go to VCs, and I guess when things go south, it just gets dumped. Not saying anything bad about the devs, but from a token perspective, these predatory VCs, I guess is part of the reason where we are now, right? It's like FTX used customer funds to invest into Sui and Aptos, right? It's kind of ridiculous. No VCs, fairer token distribution, and absence of rent-seeking behavior, where they built these free public infrastructure pretty interesting, right? I want to see what's going on. It has roughly a $63 million market cap, which seems kind of expensive for this giga inflationary token. But it got dumped to death initially, and then it went up only, and then with the crypto markets going down, it dumped a lot. Who knows? Like maybe it built a base. Sorry, this blue part is not updated, but $63 million market cap for an experiment with super inflation tokens seems kind of excessive, but I think the bull case is given the environment that we're in, where sentiment is washed out. DeFi developers are super fired up about creating decentralized systems. Maybe more people build. Maybe there's a loyal community who works towards a shared vision, and the Canto token has value, and maybe new tokens that launch has some value, even if they don't have any revenue share. I feel like the bull case for Canto is it flipping Evmos. I know Evmos raised money recently, but how does this thing have $400 million market cap, right? It makes no sense. And I'll be the first to admit, I was pretty excited about the Evmos launch, when it was first announced and whatnot. But obviously different markets calls for different opinions on things. Because I feel like it's really difficult for alt EVM chains to do well in this environment. Surely Canto can flip Evmos, right? Maybe Canto becomes the top EVM chain because of the ethos and whatnot. Nothing I don't mean to bash Evmos or something, right? It's I've been negative on the AVAX token, right? But I still like using the Avalanche chain, right? My thoughts on the ecosystem and my thoughts on the token, totally different. But yeah, upcoming catalysts, I feel ultimately depends on what new projects can launch on Canto, right? There's this hackathon happening right now. I've seen the projects in this hackathon. Seems nothing too exciting, but maybe it takes 5 hackathons for real things to be built. And also Synapse has been rumoring, or they've been teasing the Canto bridge, and the fact that they were able to amass this much TVL using the native Canto bridge, I think is interesting. And I think when the Synapse bridge actually launches, it's gonna bring on more TVL, because for you to bridge into Canto right now, you have to go to Ethereum mainnet to bridge to Canto, then you have to go to the Discord on Canto and ask for gas from somebody. And to be honest, I don't want to do that, right? I don't want to dox my address. I don't want to go through that trouble. I'd rather just wait for this thing to launch, right? And if everyone thinks that way, then maybe there's edge in alpha in bridging early and buying tokens to dump on people like me, right? It's when are you gonna launch this, right? Sounds like never. Okay, so the next section is called the Taiki is Bagholding, and you're gonna know about it section, okay? And the reason I titled it this way is because I've mentioned in the past where I think most influencers in the space, right? They have I'm not really sure what their motives are, and I've just seen so many behavior where people pump a token and they just dump it right at the first sign of trouble, or whenever they want to realize their profit. And I want to be different, right? Obviously, all the tokens I've talked about in the bear market has gone down because it is a bear market and people are just looking for cash sources, and there's a bunch of capitulation going on everywhere, and it sucks as a token holder, right? But ultimately, I don't really think that the fundamentals have gotten worse or anything, right? It's just that people are just being forced sellers or panic selling. So I guess the commitment I made is if I make a dedicated video on a particular project, I'm not going to sell it unless it's confirmed to go to zero, right? If it's a failed project and everyone knows it, then I'll sell, right? Without notifying people, right? Whatever. But assuming that it is functioning, right, and working and trying to ship and whatnot, if I do sell in the future, I'll do it in a transparent manner. So maybe one thing I could do is hey, maybe I'll say, hey, I'm gonna take profits on this coin. I'll sell 10% of my bags every single month at the first Monday, or whatever, right? I'll do it in a transparent manner so people don't accuse me of dumping or something, right? To be honest, at this point, right, in a bear market, nobody cares, right? It's hey, Taiki, sell if you want, right? And obviously, sure, but I think this type of transparency and commitment is gonna make me look better when things are better, right? It's what, fuck it, I'll bag hold, right? So the reason I'm gonna talk about these projects is, first of all, I'm bag holding, right? So that, right? I hold these tokens, And the reason I hold these tokens is because I'm genuinely excited about the future of these protocols. So yes, I'll talk about it, but I'm assuming that you're subscribed to me because you care about my opinion, so I'll share my opinion, right? And timestamps are added, so you can skip through this section if you want, right? And like whatever, right? So I mean, I've already talked about GMX and gains. I actually sold my GNS just because I wanted to like when the markets were like kind of being iffy, I was like, you know what, like I'll just like take profits. Funny thing, like I caught like a 2x on GNS, and then I bought XMON with it, and then XMON went down 50%. So technically, I didn't make or lose money. Right? Like not to brag or anything. Actually, everything else I've lost money on because the rest of my portfolio is down. But anyways, FTX went down, tailwinds for GMX and GNS. GMX hit $1 billion worth of volume when FTX collapsed. That's cool, right? That's cool. There's a GMX trading contest right now for Avalanche. So right now GLP is paying 29%, but I'm sure that it's going to bring more volume, and maybe, the GLP fees will be elevated. And AAVE Labs is allocating $4 million to incentives, so maybe that's going to subsidize GLP holders, right? So there's so many good things happening for GMX right now. I hope they don't I hope they don't like get wrecked or exploited or something, but I'll continue to support them. And in terms of gains, they're being audited by Halborn, and they're going to launch on Arbitrum soon. Their audit ETA is November 21st. So maybe they're going to launch like late November, early December, right? So I'm sure that can bring on more TVL. Funnily enough, I think GMX and GNS is both flat to up pre-FTX collapse, which is very, very interesting. I definitely did not expect it, but it makes sense, right? A bunch of things make sense if you're doing hindsight analysis, but I still think that GMX and GNS is the best way to play Arbitrum right now, given there's like not that many things happening on Arbitrum. But I think GMX is higher quality, but they both have a place in the decentralized leverage trading platform space, I guess. Also DYDX too. I feel like all these have value. All of them have positive tailwinds, and I'm excited to see where these tokens go. Right, FXS. I think the most exciting thing is like this frxETH product, right, which is their way of competing with Lido and Rocket Pool. And funnily, like the one interesting thing that I'll share, and sorry if this doesn't make any sense, I kind of have a hard time explaining this. It's hard to explain by words, so hopefully I'll give an example, and hopefully it makes sense. So frxETH is a wrapped version of Ether, right? And every ETH that enters the frxETH contract gets staked into the validator, right? So it earns ETH staking rewards. However, in order for you as a participant, as a retail participant, to earn those fees or those validator rewards, you have to stake your frxETH into staked frxETH, right? And the other point is there are obviously going to be farms for frxETH on mainnet, notably Curve, right? So you can earn yield on frxETH in two ways. One, you can stake it and earn more ETH with it, or you can LP your frxETH on Curve to earn swap fees and also Curve emissions, right? So there's two ways to earn yield. And remember, I mentioned earlier that every Ether that enters a staking contract gets staked. But in order for you to earn the staking rewards, you have to stake your frxETH. So let's assume that there's 10 Ether deposited into frxETH, okay? And the staking rate is 6%, and only 5 of them get staked. Okay, and the other 5 frxETH enters Curve farms or whatever. So what this means is that anyone that stakes their frxETH is going to receive 2x their staking rewards, because only half of the frxETH is being staked, right? And the emissions are going, or the validator rewards are going to them. Okay, hopefully that makes sense, right? You kind of have to think about it, right? Give it, like think about it for like a few minutes, and it kind of makes sense. Sam, right? Not Bankman-Fried, right? Kazemian, right? This Sam, right? He confirmed this, where if there's 100,000 frxETH minted, but only half of that is staked, then the 50,000 frxETH is going to be earning double the staking APR. So I think this is a competitive advantage that FXS and Frax has, where Frax has a bunch of VeCRV and a bunch of CVX, and they can use that to give favorable emissions for frxETH. And what I expect to happen is like if the staking reward for Ether is like 6%, maybe the farming rewards for Curve for frxETH like might be like 10%, and then the staking rewards for staked frxETH going to be like, I don't know, like 7 or 8%, right? There's going to be some equilibrium for the market, but I expect the staked frxETH yield to always be higher most of the time, right? There could be discrepancies in like the short term, to always be higher on average than Lido staked Ether or Rocket Pool rETH, right? So that's kind of cool. And I think frxETH is going to slowly but surely gobble up more and more Ether from the markets, and it's going to compete with Rocket Pool. I don't think I don't think the bull case is for FXS to compete with Lido. I think it's to compete with the Rocket Pool and other centralized staking services and become the number 2 liquid staking derivative on Ethereum. Rocket Pool has roughly 300,000 Ether staked, and sorry, this screenshot is outdated. I think the market cap is like 300 million or something. I made these slides some time ago, but and there's a bunch of slides, so I kind of forgot to update. But let's just say that the market cap of Rocket Pool is 300 million, right? So the market is valuing a liquid staking derivative, that has 300,000 ETH staked at roughly $200 million. So if FXS can compete with Rocket Pool, then surely there could be a repricing of FXS in the future, if FXS can not only be an issuer of stablecoins, but can also be an issuer for wrapped Ether, like staking derivative, like whatever. And 10% of the ETH earned is going to go towards VE FXS holders, so it's additional cash flow. And FRAX is basically a stablecoin issuer for Frax and frxETH, where VE FXS holders get cash flow from those business operations, right? I think it's kind of interesting. I'm not going to read through this, but obviously, right, FXS is like a pseudo governance token with like some cash flow, right? Not too many, but I think the bet on FXS is a bet on the team continuing to ship, a bet on Frax growing its supply over time. Obviously, in the short term, probably not, but yeah, over time, and frxETH gaining more market share. And for me, I have my FXS on Convex, earning roughly 15% to 20% in yield, and I'm happy just writing it out. And C2TP, who's the lead dev for Convex, mentioned that the Curve rewards emissions should start to be higher starting 17th or the 18th, because right now the emissions are kind of low, right? But it takes time for these things to go live. So hopefully the rewards are high enough where it attracts more Ether. But who knows, right? Wait and see. Cool. Let's talk about SudoSwap. Obviously, bought a bunch, down, right? It's capitulated, right? So I'm down bad. Funny story, right? Recently, a couple weeks ago, right before FTX collapsed, I watched this musical called Hadestown, right? It's a Broadway, right? I love musicals, right? Hamilton, I love Hamilton. But anyways, Hadestown, the first song that they sing was Road to Hell, right? And the reason I'm bringing it up is because at the very end, you know how every musical, the cast, comes out, they like bow and the crowd gives them like a standing ovation. It's like, oh yeah, like you're so amazing. And then at the very end, the cast asks for donations, to like support like Broadway, programs and whatnot, right? It's like, hey, like whatever. And Eva Noblezada, who's like the main singer for Eurydice, at the end she was like, hey, there will be people outside with red buckets. We accept cash, credit card, check, but not NFTs because those aren't real. And everyone was like, yeah. And this was even before the FTX collapse, right? And I was like just standing there. I'm what mess have I got myself in? But who knows? Like maybe that's like where sentiment is on NFTs. I do expect NFTs to come back, to be honest. But who knows? Like maybe I'm just I should like mark my investment as 0 because it's down a lot. But anyways, that's where we are with NFTs. But let's go back to the fundamentals, right? Yeah, that was like just a funny story I wanted to share because it happened relatively recently and it happened right before the market collapsed. Obviously, the biggest topic right now is, I guess, creator fees, right? Royalties. all these OpenSea forks, like these central limit order books, they're trying to compete with OpenSea by just lowering fees, right? And just like making royalties optional, or just like lowering it just outright. And OpenSea recently came out and they said that, they're gonna continue to enforce royalties. Like, to be honest, like, I think OpenSea will remain the #1 exchange, right? For NFTs, right? It's similar to how Binance and Coinbase volume, for the most part, is still like above that of Uniswap. But it doesn't necessarily mean that decentralized exchanges like Uniswap doesn't have any value, right? They will coexist. But I think the writing on the wall is pretty clear. I think that fees will converge to zero over time. Right, and given how new the NFT space is, OpenSea is able to charge 2.5% fees per swap, and creators are able to charge fees. But I do think that OpenSea fees will go down over time, and the marketplace that's going to compete with OpenSea isn't going to just purely do it based off of user experience or user interface. It's going to do it, they're going to compete based off of liquidity advantages. And that's like my bull case for Pseudo. And I'll talk about like why I think that is. So CK from Defiance Capital, this was posted like when prices were like a little bit higher, right? So obviously, right, at this point, who knows, right? I'm a certified bag holder, right? So like don't listen to me for advice. But I do think NFT AMMs make sense. I think concentrated liquidity for AMMs make a ton of sense. And I think central limit order books for NFTs and pseudo NFT AMMs will coexist, where certain types of NFTs will just have the majority of their liquidity on OpenSea, right? So like, for example, like generative art 101 NFTs, right? Those types of things should live in OpenSea and should charge royalties, right? Of course. But things like fungible PFP projects, if a game comes out with like some sword NFT, right? And it's like some cheap sword, right? They're all fungible. Like, it's going to be more capital efficient for those NFTs to be listed on like an AMM, right? With custom curves. It just like naturally makes sense. And I guess the argument against Pseudo is like, everything is open source. Like, why can't anyone fork Pseudo and introduce like some farming incentive to like take away market share? And those are valid points, right? But as a bag holder, let me give my counter argument against that. So Uniswap, back in June, they acquired Genie, who is an NFT aggregator, and I can definitely see the argument on like, why can't Uniswap compete with Pseudo, right? Like, they're an AMM, right? Like, why don't they create their own thing? But here's the reason on why they're not doing it, right? So they acquired Genie, an aggregator, instead of creating their own AMM, and they mentioned that starting this fall, you'll be able to buy and sell NFTs directly on the Uniswap web app. And I think Uniswap can also take away market share away from OpenSea, depending on the type of product that they launch. I have no idea what type of product they're going to launch, but I could have some sort of an idea, right? And fall is sometime in Q4, maybe, given this entire drama, right? Maybe it gets pushed back. But Hayden, the founder of Uni, has been pretty optimistic on the timing of this. And Uniswap Labs have been quietly building under the bear. Our team has grown 3x. Redacted are almost finished, and a lot more coming after that. And given this announcement, I'm sure that one of them is going to be Uniswap NFTs, maybe Uniswap V4, maybe some other product, who knows? But it's surely coming. Core financial infra, such as the ability to exchange value, is too important to be controlled by corruptible centralized entities. This is one of the many reasons I work on DeFi and at DEX. Go Hayden. I love Uniswap. I think they're one of the strongest teams in crypto. And I'm not sure if I agree with his fashion statement, right? But let's keep going, right? So Scott, who is the founder of Genie, right, who got acquired by Uniswap, who is now the head of NFT products at Uniswap, okay? And Scott is a very avid supporter of Pseudo, and he believes Pseudo is the leading NFT hyperstructure. And I think he's saying that the next Shopify is going to look a lot different than whatever exists now. Where if you think about the business model of Shopify, they just create, I guess, like the infrastructure for small and medium to large business owners to build their own marketplace from. And obviously Shopify takes a fee for whatever transactions that happen on Shopify. And similarly, what I think could happen is SudoSwap can be like the base layer of new marketplaces that get built for example, like new projects and NFTs. And what Scott is saying, that any NFT owner can now become their own marketplace, just deposit NFTs in Ether, right? Create your own AAVE pool, set your fee on top, and that can be your way of charging royalties, right? Instead of relying on OpenSea to charge royalties, why not just create your own marketplace, set a fee, and just like, benefit from that. And Pseudo takes a 0.5% fee. So that's so, and like reading between the lines, like maybe I don't know if I have it here. Maybe I don't have it here. Yeah, I don't have it here, but if you go to, actually, let me just pull it up. Let me just pull that up. If you go to Genie, right, XYZ, they're like basically no longer tweeting because they got acquired obviously by Uniswap, right now Uniswap. But if you go to the recent retweets, right, it's like Scott saying acquired, NFT roadmap Uniswap unmatched, and then we'll be launching NFTs on Uniswap with full pseudoswap support, pool data flowing in. So the optimistic guy inside of me says that part of the Uniswap NFT offering is going to be a way for new projects and existing projects to launch their own NFT marketplace using pseudoswap and Uniswap as like the base layer. So hopefully that happens, right? I have no idea, right? A bunch of my money is in the hands of this man, and I can say with confidence that maybe that was not a sound financial decision. But let's keep going. And pseudo AAVE protocol is designed to be flexible, support for many use cases. They're already working on a standard router contract that can already enforce royalties on chain, right? That's one of the things that NFT people did not understand. It's like, oh, I thought royalties were baked into the smart contract, but that's not the case, right? Because if I send an NFT from me to you, right, there's like no royalties, right? I mean, if there's like a peer-to-peer transfer of NFTs, like there's no royalties, right? So if there's like a peer-to-peer decentralized exchange marketplace, then you can circumvent royalties. Like OpenSea, central limit order brokers like Blur, X2Y2, Lux, they're going to coexist with AMMs. But I think the advantages that AMMs offer is just better liquidity. Just better liquidity, right? And liquidity is the most important thing when it comes to DeFi projects and NFT projects. And Gem, right, the other aggregator who got acquired by OpenSea, right? So OpenSea, they're going to be releasing support for buys on pseudoswap. So if you go to Gem and you want to buy something, you can like buy stuff too. But a complete support with sell-side support with other fancy things will follow on in the later release. So with Gem V2, which is coming, I have no idea, right? This was posted October 24th. It's going to allow people to just instantly sell their NFTs, right? And this is one of the huge, like the biggest issues with NFTs, right? Which is like they're super liquid, right? Similar to how Alameda was able to say Serum was like a $3 billion asset when the circulating market cap is like 60 million. You can't really look at NFT market cap because that liquidity isn't really real, right? And I feel like for NFTs to get to the next level, it just has to be more liquid. There has to be instant sell-side liquidity, right? Similar to how you can sell Ether on decentralized exchanges immediately without having to find someone to like buy it off of you. There has to be a way for NFTs and NFT owners to just sell your NFTs instantly. And of course, Pseudo will be part of it, and maybe OpenSea is gonna just be their own market maker where they're gonna accept any NFT bid 5 to 10% below spot price or floor price. I have no idea, right? But I guess the argument against why can't someone fork Pseudo and take away market share? I mean, sure, it's gonna happen, right? I mean, people forked OpenSea and took away market share by charging lower royalty fees. But obviously, like things like LuxRare, X2Y2 probably don't have a future. I mean, even if they have a future, I don't necessarily think that their token model makes sense because they're subsidizing a bunch of trades with inflationary token rewards. And similarly, they're going to be competitors, but I think their edge is their integration with Uniswap / Genie and integration with OpenSea / Gem. And I think larger marketplaces like OpenSea and Uniswap, I think they understand that it's going to be very, very difficult to compete with existing marketplaces, and it's probably not a best use of their capital and resources. So I think what they did was they just acquired an aggregator like Gem, like Genie, and they're probably gonna slap on fees on top of it. And if we're in that environment, I feel like Pseudo can become the winner as the base infrastructure. But who knows? I've been wrong many times before. So whatever, right? Don't rely on me for for me to predict the future of NFTs. But I do have pretty high conviction in the NFT sector. I do think that it will come back. I think it will be one of the first to come back, given that it's very, very easy to understand the value proposition of NFTs, right? Self-custody, digital identity, digital culture, art, all that. Cool. Rapid fire section. Let's go quickly. So Atom 2.0 was rejected. And this kind of happens with Cosmos, like governance, right? Like Cosmos moves very slowly, right? In a bear market, it's probably fine. And now they're gonna talk about like how can we improve on Atom 2.0. And I talked about Atom 2.0 in my last video, so feel free to go to that section, right? Timestamps are included. Obviously, like from a token holder perspective, the fact that it moves so slow might be like a deterrent, but I think it's good to see like actual governance proposals like get rejected, and now the committee is forced to figure out what changes are going to be made to shape the future of the protocol. I still like Cosmos, right? I still really like it. I definitely want some exposure at some point. Right now, I'm focusing on Ethereum and ETH2s, right, in those projects within those ecosystems. But I definitely am looking for Atom or just I don't know, Cosmos Hub projects. Maybe DYDX is like a good thing there, right? It's like Avi Feldman, right, the head of Golden Tree / Golden Chain. Where's the alpha? Well, Cosmos FTV still very low, right? Very, very low. Dopex Atlantic puts, I think it's kind of interesting. Basically, TLDR is, you can open up a levered long position on Ether on GMX, but your position won't get liquidated because at the same time, you'll be purchasing a put option on Dopex. So, if I technically get liquidated on GMX, on Ether, because it dumps and it pumps a lot, won't the put expire worthless? Well, technically, yes, but if price dips to the put price of 1100 or lower, right, in this scenario, the deposited collateral from the put moves to your long position to bring the liquidation price to zero, and you begin paying the funding fee for borrowing that collateral. So I'm like, okay, that's kind of cool. And I don't have it like live with me, but basically you can kind of like move the leverage to 2x or like 10x, and then it'll automatically like figure out your the most optimal put option to buy will be, and it'll show like the fees and whatnot, right? Like my honest reaction right now is like from a tech perspective, it's pretty cool, right? You combine GMX and Dopex, and you create this non-liquidatable product, but who's going to use it, right? Because like, why would I open a 5x levered long position on here, right? Paying a bunch of fees. Like maybe it's better for me to just like open a 5x lever position and just go with the flow, right? And just say if I get liquidated, I get liquidated. I mean, I haven't seen it like. I feel like what would be useful is like if there's like a chart where if ETH goes up 20%, I'm this much better off just by naked longing versus like doing this Atlantic put product versus if ETH goes down 30%, I'm this much better off by 3x longing on this product over just naked long on GMX. But it's an innovative product, so I'll highlight it, right? I'll share it. And this is a different example where $100, 5x leverage, it opens at this put price, and I'm paying $106.52 to open this. So I'm basically paying a 6.5% fee to open a 5x leverage long position that won't get liquidated. But I guess like the downside is if this put expires at the end of the week, then I'm no longer protected. So I have to open a new position. So maybe the user experience has to be improved upon, but hey, interesting, right? And they're also teasing Dopex USD. I still have no clear idea how this works. I mean, I understand it's like over collateralized by USDC, Atlantic puts, and RDPX, but like, what's the utility of DPX USD? I have no idea. But we'll keep an eye out, right? Cautiously optimistic on Dopex. Premia launched a new VE model. To be honest, like, it doesn't matter if you improve your tokenomics. You just have to have a good product that people use, that people pay to use. And I'm still waiting on it, right? I'm still optimistic on Premia. I think whether or not their V2 is good kind of determines their fate. But if you go to their GitHub, sorry, if you go to their Discord in the GitHub section, you see every day, right? Their devs are shipping something, right? I have no idea. You can't click on it because it's private, but they're shipping something, right? So cautiously optimistic on Premia. And AAVE is gonna ship sometime this quarter, right? And I'm talking about these options protocols, right? Decentralized options protocols, because I mean, it's obvious that, decentralized perps like GMX, GNS, DYDX, they have tailwinds, but everyone knows that. What's the next growth narrative? It's going to be decentralized options. And right now, none of these projects have figured it out, right? Like these projects, to be honest, like not that great, right? Not that liquid. However, whoever figures it out is probably going to be worth multi-billion dollars. So I think it's good to keep an eye out. Still looking into it. To be honest, like, I'm really looking into it, right? Like, honestly. But I'm not sold on any of them yet. But who knows? Maybe it's going to be like a Q1, Q2 story next year. Yeah, I guess like touching on this, like finally, right? I feel like there's been a bunch of poor media coverage on like the whole SBF thing. And it kind of angers me, right? Given that I'm the part of this industry. Like this is from the Financial Times, and for like whatever reason, like the Financial Times is pointing to CZ being the bad man, right? It's like Chinaman liquidated American guy entrepreneur, therefore Chinaman bad, right? It like doesn't make sense to me. So I think as an industry, I think it's really, really important to push back against these, frankly, like stupid journalists that have no idea what they're talking about, but they're just like using these things to just get clicks. And honestly, like it's kind of how these media companies are structured, right? It's like even YouTubers, right? It's like if it's free to consume, then you're a product, right? Like your eyeballs are the product. And if YouTubers run YouTube ads, then they monetize off of people's attention, right? And that's why you see all these engagement farming going on Twitter, journalism, and YouTube, whatever. I don't run ads, right? And I try not to do like clickbait stuff. But it's a sad to see, right? It's like, I mean, I personally don't want Binance and CZ to have all the power, right? They have this recovery fund. They're investing into like distressed assets. I mean, that's cool, right? That's probably a net benefit for the crypto ecosystem if Binance can save some projects that would have otherwise gone bust. But it also means that Binance is going to hold more power. CZ is going to hold more power. And I personally like CZ over SBF, right? I think CZ, has the crypto ethos, but he's also a part of Binance, right? And I think as an industry, I think it's best to just vote with your money, right? It's like I never traded on FTX, I never traded on Binance because I don't want to give them fees. And similarly, right? And I mean, this is not like trying to virtue signal or something, right? I mean, maybe I am subconsciously, but if you want to really be true to like the ethos of crypto, right? Like it's good that decentralized platforms exist, but just understand the values of self-custody, and also understand that, hey, if you're going to use these platforms, understand the downside, understand the upside, and whatever fees that you pay to them, it's going to help them consolidate more power. My hope is that both centralized platforms, decentralized platforms coexist. They mutually benefit each other. But for me, fortunately, I was not hit by the FTX saga because I self-custodied all my assets. Of course, all my tokens went down, but I don't know, at least I hold the same number of coins, right? At least there's hope that my tokens can recover. So thank you guys for watching. Let's see how long this video is. Cool, okay, not too bad. So you'll probably hear from me December for the next state of DeFi, unless some crazy thing happens. If you want more frequent videos, updates, feel free to check out the Discord. Link is in the description below. Bye-bye, right? Hope everyone's okay.